Regarding the guaranteed insurability rider, it allows the insured to purchase additional amounts of insurance without proving insurability, only specific dates and events. The insured may purchase additional coverage at the attained age. The insured may purchase additional insurance up to the amount specified in the base policy. The insured is available to all insurers, no additional premium. Well, the guaranteed insurability rider is going to cost more if you get it, so that's false. So it's saying all the following are true except. Okay, there's a rationale, so you could screenshot it, and you could pause this video to screenshot it if I'm going too fast. All the following are non-forfeiture options except non-forfeiture options means I don't want to forfeit. Extended term, reduced paid up, interest only, cash surrender. It's going to be interest only. Okay, so these are three reduced non-forfeiture options: is reduced paid up, extended term, cash surrender value. Those are non-forfeiture options. That means you don't want to forfeit your policy, so I want to keep the policy or I want to just cash out. Okay, that's non-forfeiture options. And applications for insurance may contain information about a person's race, religion, ancestry. Sheesh. I think never, because it sounds like discrimination if you do that. Okay, I was right. So that one's, you just use common sense on that one, right? In a survivorship life policy, when does the insured pay the death benefit? Survivorship until the last dies. Upon the last death. There it is. The last one, death, because it pays until the survivor dies. That's the last one to die. Which of following is not a term for the period of time during which the annuitant or the beneficiary receives income? Which of following is not a term for the period of time during which the annuitant or beneficiary receives income? Payout period, annuitization period, depreciation period, liquidation period. Depreciation is depreciation because it doesn't depreciate. You're actually liquidating. It's paying out. You're getting money out of it. So it's not going down because it's depreciating. It's going down because you're taking money out. Representations in insurance contracts qualify as representations on a contract as express warranties. Ooh, implied warranties. Man, I got this one confused. Representations in insurance contracts qualify as implied warranties. Representations and implied. Okay, my bad. Next one. If a person is disabled at age 27 and meets the Social Security definition of total disability, how many work credits must he or she have earn to receive benefits? And Social Security total disability, I think it's 40 total disability. Damn it. So it's only 12. 27 total disability work credits must have earned received. Okay, so 12. Sheesh. There's the answer right there. You can screenshot that. Rationale. Read the rationale on every single one of these. You could pause the video and read the rationale so you could learn. Which of the following is correct regarding credit life insurance? Credit life. It is maximum 20 years. No, there's no limit. It insures the life of the creditor. No, it insures the life of the debtor. It is purchased on an installment basis. Yes. It insures the life of the debtor. Yes. There it is. It ensures the life of the debtor is the best answer. Read that. Let's go to the next one. When must insurable interest exist in a life insurance policy? At the time of application. Insurable interest must exist at the time of application. Okay. Always. An employee quits his job and converts his group policy to an individual policy. The premium of the individual policy must be based on the attained age. Attained age. What age are you now? So it doesn't matter about when you got the policy, but if you quit your job, you're older. The new insurance policy is going to be based on your attained age. I'll say, what is your current age? Which non-forfeiture option has the highest amount of insurance protection? Highest amount of insurance protection, extended term. It keeps the same coverage, which is the highest. Instead of reduced paid up, it reduces the coverage, but the answer is extended term. But the coverage ends sooner. That's the only negative thing about that one. Coverage ends sooner. A man decides to purchase a 100,000 annual renewable term policy to provide additional protection until his children finishes college. He discovers that his policy annual renewable term, the cost requires premium increase each renewal. Every year the premium increases because he's getting older. Okay, that's how it works. So read the rationale always. Okay, you guys that are studying, read the rationale. Always, always, always read the rationale. An IRA uses immediate annuities to pay out our benefits. The IRA owner is nearly 75, old, and he decides to collect distribution. What kind of penalty? He's gonna get a penalty for withdrawing. Wait a minute. No, there's. Yeah, this is a. Oh, this is an IRA, so there is gonna be a penalty because he withdrew late. Late distribution, not early, so it's not D. It says no penalties. Yes, there is going to be penalty because he even though he withdrew after 59.5, he started the withdrawals after 72.5. So 25 of the amount distributed, 50% of the early withdrawal. It's going to be 25% down. Okay, so it's crazy that they're asking you for IRA questions on the test. It's dumb, it's stupid actually, but hey, it's going to be there, so you might as well study it and learn it. It's good to know about IRAs anyways. Good information. Very practical stuff. A corporation is the owner of the beneficiary of the key person life insurance. If the corporation collects the policy benefit, then the benefits, corporation is the owner of the beneficiary key person, then the benefits are taxable. Could be wrong, but let's see. Oh, tax free. Key person is collect the premiums. Okay, dang. Okay, so read that. Okay, key person insurance, the benefits are tax free. You don't pay benefit taxes on it. A small hardware store owner is involved in a car accident that renders him totally disabled for half a year. Which type of insurance would help him pay for expenses of a company during time of disability? Pay for expenses of the business. So this is overhead expense policy. That's going to be the one. Okay, overhead expense policy pays for the expenses of the business while he's on disability. An insured has been found guilty of a code violation regarding replacement. The insured then repeats the violation. So regarding replacement, insure first is $10,000. After that is repeats violation. What the minimum penalty? Dang, did they change it?
I remember the first one was 1,000.
No, 1,000 is for agent. This is insure. This is insure. Dang. 30,000? Yeah, 30,000. There it is. So the answer is 30,000. I thought it was 50,000, but I don't see 50,000. So it's not 50,000. It's 30,000. Okay, on the repeat violation. On the first violation is $10,000. Which life insurance settlement option guarantees payments for the life of the recipient, but also specifies a guarantee period during which, if the original recipient dies, the payment will continue to a designated beneficiary. Fixed period, lifetime of the recipient, joint survivor, life income with period certain. It's going to be this one, life premium with period certain. It says it in the answer, right? Specifies a guaranteed period. Well, that's period certain. Okay, read the rationale. Make sure you read the rationale. Which insurance principle states that if a policy allows for greater compensation than financial loss incurred, the insured may only receive benefits for the amount lost? Indemnity. Indemnity only pays what you lost. It doesn't pay more than what you lost. That's it. It's only going to pay you what you lost. All of the following are features and requirements of the living needs rider, except it is usually available at no additional charge. Diagnosis must indicate that death is expected within 3 years. The remainder of the policy proceeds is payable to the beneficiary at the insured's death. It provides funds for medical and nursing home expenses to a terminally ill patient living needs. Damn it. Okay, diagnosis must indicate that the death is expected within 3 years. It's actually 2 years. See that? It got me? So it's actually 2 years. There we go. According to the code, how many separate requirements should an insurance policy have? Sheesh. It's 4 or 6. I'm going to go with 6. I don't know. There it is. Yeah. Read the rationale. What?
You don't have any creamer hiding in your fridge?
I don't have a fridge here.
Oh, there you go.
The fridge is... I took it over there because I never use it. Why is an equity index annuity considered to be a fixed annuity? Why is an equity index annuity considered fixed annuity? Because it has a guaranteed minimum interest rate. That's why. So it's not invested in mutual funds because it has a guaranteed minimum. Mutual funds are invested in a variable annuity. Variable annuity is mutual funds. Which of the following products provides income for a specific period of years or for life and protects a person against outliving their money? Protects a person against outliving their money is an annuity. An annuity. That's what an annuity does. It provides income for life. That's the whole purpose of it, right? What is a time frame that an agent or a broker has to provide information on a workers' compensation file? 10. I don't know. Let's say 30 days looks good. 60 days. That's the answer. Okay. Which of the following determines the cash value of a variable life policy? The performance of the separate account, or the performance of the portfolio, which is a separate account. Okay, that's the answer. Okay. Next one. Which of the following is not a type of temporary insurance agreement? 30-day intermittent conditional receipts, acceptance forms to receive binding coverage. Man, I have no idea. I forget this one. Binding coverage receipt. So that one's not a type of temporary insurance agreement. The rest are 30-day conditional acceptance form and receipt. Okay, it's a tricky question. It always gets me. The premium of survivorship life insurance life policy compared to what type of joint life policy would be? Survivorship, it's longer for two, doesn't pay until the last one dies. So premiums for joint life is going to be, what's the common sense here? Higher? Would it be higher or lower? Well, survivorship is going to be lower compared to joint life. There it is. I got mixed up with what they were trying to compare to. So survivorship is lower compared to joint. That's what it's saying, okay? Survivorship premiums are going to be lower than joint life. Which of the following policies is characterized by provisions where the premiums are lower in the early years and then increase over time to the point where they become level in the room? So this is a graded premium whole life, or graded premium whole life. Got it. Read the rationale later on. Based on human life value approach, which of the following is not used to calculate an individual's life value? Individual's life value. Proceeds need to be the family after affected inflation income over time. Human life approach is based on income. Annual expenses. Ensures future income. Affected inflation. Protects the needs of family after ensures death. I think it's that one. Yep, it's that one. Read the rationale. A contract which one party undertakes to indemnify against another loss is called insurance. That's the answer. Insurance. Which provision of life insurance policy states that insurer's duty to pay the benefits upon the death of the insured or to whom the benefits will be paid is the beneficiary clause? Yeah, it's to whom the money's going to go to. Dang, the insurance clause. There it is. Read the rationale, guys. Read the rationale. Why? The answer is the answer. An agent selling variable annuities must be registered with FINRA. Because if you're selling anything variable, you're selling a securities product, and securities products need to be registered with FINRA. If a consumer requests additional information concerning an investigated consumer report, how long does the insurer report an agency have to comply? I don't know these questions. I don't like the numbers questions. The answer is 5, okay? This is all memory, all right? My memory sucks, so I keep forgetting these. All the following are duties and responsibilities of producers at the time of application except producers. That's agents. To probe beyond the stated questions, fields, if applicable, misrepresenting, concealing information. Check to make sure that there are no unanswered questions on the application. Change any incorrect statements on the application by person initialing next to the. I don't think you could do that. Explain the nature of the type of recipient producer giving the applicant. Check, make sure that there's no unanswered question on the probe beyond. I'm gonna go with that one, guys. Bam, there it is. Use common sense, right? You can't change the questions and then sign it directly. You sign it. You can't do that. All the following are insurable events as defined in the insurance code, except an insurer sues a label for slander. An insurer goes to the hospital and broken arm. A insurance code. A guest trips and breaks his leg in a house. An insured loses a large sum. Poker. This one's obvious, right? You can't insure a poker game. Yeah, you can't insure a poker game. Which are following as another term for accumulation period and annuity. Accumulation means it's growing. Premium period, paying period. That's the best answer, actually. Paying period. Okay. Which contracts that are prepared by one party and submitted to another party on take it or leave it basis is classified as adhesion. Contract of adhesion. You either adhere to the rules, take it or leave it. You don't like it, okay, go somewhere else. That's adhesion right there. Okay. Next one. How are we doing? 115. How long will the beneficiary receive payments under a single life settlement option? Single life, that's life only. That's pure life. That's forever. Until the beneficiary dies. How long is the beneficiary until the beneficiary dies? There it is. You see that? So if you know how it works, then now you could just find the mechanics on one of the answers and bam, you're going to get it right. An insurer wants to change from an annual premium mode to a monthly premium mode. Which of the following is true? So he's going from annual to monthly. So his premiums are going to be increased. They're going to go up because now he's paying per month instead of per year. Without penalty, it is possible that change of monthly premiums mode to annual mode. It is only possible. No, this change can only be made on policy anniversary. The insured needs to terminate one policy to get a new one. No. Dang, which one is it? The insurer can make this change anytime without. Yeah, that's the obvious one. You know, you could. What? The change can only be made. Okay, this is test. This is not real life stuff right here. Okay, on the test world, you could only change it on the anniversary date. Not in real life, but that's on the test. When an employer offers to give an employee a wage increase, so the amount of the premium and life insurance policy, this is called a executive bonus, because you're giving him a bonus so that he could buy his own life insurance policy using the bonus to pay for the premiums. In modified life policies, what happens to the premiums? Modified life, it always remains level. No, it modifies, it changes, it varies in the beginning. No, it's higher in the first year. No, it's lower in the first year. In the beginning, increase after a few years. It modifies higher. It modifies for a higher. All right, cool. We are software that we have. You're able. It allows you to see what's a good passing score in California, 60%. So obviously, you did right here. I did 74, and it tells you also the breakdown of all the chapters and what percentage you're getting on each chapter. So you could also study the chapters, and if you want more breakdown, then you could see it right here. So for example, the big chapters like chapter 4, you could see that we got 10 out of 10, so it gave me thumbs up on everything. But if let's say I would have gone one wrong, let's look at this one, chapter 3. There's 10 questions. I got a thumbs up on these two sections of the chapter, so I need to study these two sections to improve my score. This is really cool. So it gives you a good breakdown of that. Not only that, but it also gives you a good breakdown of the questions you got wrong. So for those of you watching on this video, go ahead and screenshot that. Okay, you could keep them in your camera roll, right? Or pause the video and study them, right? Study these questions. It's all about studying questions over and over, unlimited amount, so that you could pass this test. Okay, so screenshot that, screenshot that, screenshot that, screenshot that, screenshot now, screenshot now, screenshot now, screenshot now, screenshot now. You read them, you review them. Screenshot now. This is the tedious part, right? This is a part that you have to put in time and you have to do it on your own time, right? Screenshot now, screenshot now, screenshot now. Do it in your own time, because this is how you study. This is how you start memorizing all the stuff that's going to be on the test. And then take the test again and always be improving your score, right? So here on our software, you could always go back to the chapters and study the sections that you're having a hard time with. There's key facts right here, glossary. And then once you pass as a practice test, now you're going to be able to take the readiness exam. And this is how you know, you're going to know for sure if you're ready to take the test and you're ready to pass. So that's how you do it. It's a full exam again, and you have to get 75% on this exam. And then, you know, the company now knows, we know, and you know that you're ready to pass the test if you get 75% on this exam on your own. Okay.